Have you ever wondered where money actually comes from? Not just the cash in your wallet, but the invisible money flowing through banks, apps, and even your phone? Today, I'm going to reveal the hidden system behind every dollar you spend, and how understanding it can change the way you think about wealth forever. Let's start with the basics. Money isn't just coins or paper, it's a system of trust. Thousands of years ago, people traded goods directly, but that was slow and complicated. So we invented money, first as shells and coins, then paper, and now digital numbers on a screen. But here's the twist. Most of the money in the world doesn't exist physically. Over 90% is just numbers in computers created and moved by banks and governments. So, who actually makes money? You might think it's just the government printing bills, but that's only a tiny part. Most new money is created by banks through a process called fractional reserve banking. When you take out a loan, say for a car or a house, the bank doesn't hand you cash from a vault. Instead, it creates new money by typing numbers into your account. This is how economies grow. But it also means that debt and money are deeply connected. But who controls the flow of all this digital money? In the US, it's the Federal Reserve, or the Fed. The Fed sets interest rates, which influence how much banks lend and how much money is created. In times of crisis, you might hear about quantitative easing or money printing. That's when the Fed creates money to buy assets like government bonds, pumping more cash into the system to keep the economy moving. But this can also lead to inflation when too much money chases too few goods, making prices rise. So why does all this matter? Because the way money is created affects your daily life. When there's too much money in the system, prices go up. That's inflation. When there's not enough, the economy slows down, and people lose jobs. And because most money is created as debt, our entire system depends on people and businesses borrowing and repaying. That's why interest rates, inflation, and government policy can change how much your money is worth even if you never see it happen. Today, money is becoming more digital than ever. Apps like PayPal, Venmo, and even cryptocurrencies like Bitcoin are changing how we spend, save, and invest. But the basics haven't changed. Money is still about trust and systems. Digital money moves faster, but it's still created and controlled by banks, governments, and now, even computer code. As we move toward a cashless world, understanding how money works is more important than ever. Let's bust a few myths. Myth 1, the government prints all the money. Fact, most money is created by banks through lending. Myth 2, if you have cash, you're safe from inflation. Fact, inflation affects all money, cash included. Myth 3, digital money isn't real. Fact, most of your money is already digital. Now that you know how money really works, you can make smarter choices, whether you're saving, investing, or just budgeting for groceries. Want to learn more about building wealth, digital finance, and making your money work for you? Hit that subscribe button like this video, and check out my next video on how to start investing with just $100. Thanks for watching Digital Money Lab, where your financial journey begins.